Okay, the purpose of this short video is to explain cycles, that price moves in cycles, and we have novice trader Cindy on the line to hear today about a new subject, but a very important subject. And the point is, we'd like to show how price moves from a low up and then to another low or another high. So we refer to this price action from this point here, this low here, to the next low as a cycle. Price has completed one cycle. As the further price pulls away from your moving averages, it wants to return to the moving averages. It's like a magnet, so price will pull back always to a moving average. Whether the particular length of the moving average is not important. The longer the moving average, the longer it will take to pull back to that moving average. Here's again a cycle. From this low, goes up back to the moving averages, and it then pulls away. So this here is cycle number 2. We looked, here's cycle 1. We're always looking for cycles in the price action of a stock. So the price went down. It's getting far away from your moving averages, so it wants to pull back. The technical term for this is called return to the mean. Price wants to return to its mean. So once again, it pulls back to a moving average and it pulls away. It wants to get back to its moving averages. Then it pulls away. Now this is an extreme move, and this is the one that is very extreme from the moving average. And as you can see, the moving averages follows it down. But this here, this is a cycle. This is a very extreme cycle. The next cycle, well, let me go back a second. This low is lower than this low. Now look here. In this cycle, this low here is lower than this. So this is a potential cycle reversal because now this low is higher. So this is a potential reversal to see if this then could break out above the moving averages. In this case, it didn't. It went to moving averages. This was all resistance, a wall of resistance. Once again, it could not get through it. You see here, this is a wall of resistance. Price could not get through it. Here's another. These moving averages form a wall of resistance. It's difficult to get through these moving averages. So here you have the cycle low. It's a down cycle. Here it did not go as low, so it's a potential reversal. Once again, though, the moving averages were a wall of resistance. Then price took an extreme divergence or deviation from its moving average, and once again price wants to pull back to the moving average. So here we have a potential reversal in the cycle. And why do I say that? Is because this cycle low is higher than this cycle low. So do you see that, Cindy? Yeah. Okay, so now we know we have a potential. And what a lot of traders will do, they'll take this and they will put a trend line here to see. Okay, they'll have a trend line. So from here to there. So it shows we have a potential reversal up. Once again, it goes to all the moving averages. This is a lot of resistance. It can't get through. So what does it do? It goes down. Now this time it goes down further. So once again, it's reversing down. So that negates this trend line because it didn't work. Price did not get through. So this one is dead. We basically remove that. Okay, so now we have an extreme. So we're looking for a cycle reversal. Here, price goes back up to a moving average, but what happens this time that's different? Exactly. Price broke through all of this resistance and it went above. So this is a very powerful indicator that a reversal of trend has occurred. It came once again back down. Once price breaks a moving average, your resistance, the resistance now becomes support. So this here is now support. Price went down to the moving average and once again it moved up away from the moving averages. So in effect, you have a reversal. You can draw now a trend from here to this area here. And what I'm going to do is expand the chart so we can see that better. Okay, you see? So here's a cycle. It started a new cycle. It came down to the moving averages, which are now support. They're no longer resistance. Price pulls away, came back down to support. Now once again, you notice here on a short-term basis, the cycle high was not higher on this cycle. So it shows it was not as strong on the second cycle. It came back to support. Once again, price pulls away from support. Here starts another cycle. So it goes to a high, came back a little, and then went to another high and immediately another high. So you could consider all of this as one cycle. From the moving averages, moves away, and it wants to come back to the moving averages. So here it is at support. We can draw again, we could have drawn a minute ago this trend line. You see this little cycle here. It's a higher low. These are lows, but this is a higher low. This low is higher than the previous low. We have this cycle. It pulled back to here. Once again, we have, what is this called? A higher. Very good. So it shows price is stronger. So let's draw another trend line. Okay, so you can see here trend reversed, went through the moving averages, came back to the moving averages for support. It moved away, it moved up, came back to the moving averages for support. Here's the next cycle. It came up. In this case, it's a little stronger, which is a good sign. It came back, and you see here it started to consolidate. You have a higher low right here, so if you want to extend that, or we could draw a new trend line right there. Now, what's happening though? We see price action is starting to do what? What do we call this? That's right, exactly. It's starting to go sideways, but let's see what's going on here. We could draw this. We have a little channel, but basically price is starting to move sideways. And now what's happening right now, it's exactly, it's all consolidated right here. And what's starting to happen? What do we see? If we take this as a cycle, starting, that's right, it's starting to come down. However, this should be support, right? So it's possible that price is going to find support somewhere in this area, and we'll see. It might reverse up, it could go higher, but with all this consolidation, it's possible that this time it won't go as high, and it could come up and then start to roll over and start to form a new low, in which case it would start a downtrend. So you can see here there are cycles within cycles. Here's one big cycle. We could take this whole period from here to here. You could say that's one big cycle, or you can break it into smaller cycles. You see, there's two cycles within this one bigger cycle. Now you can we did a quick analysis of all these little cycles, but we can take this, all of this, as the up leg of a big cycle, right? So it's possible what could happen next. we could be looking for a leg down. In other words, all of this now we could start, in fact, we could draw a trend line right here and see. So you can see price, the health of price changes as it moves in these cycles. So we'll have to see what happens here to see if it goes lower than this low. This could be support. Or for the advanced students, we could even throw on a Fibonacci retracement value. And let's see, here we go from this high, or we could go from here to right here. Or since we have purists out there, what we can do, let me get rid of this, and we could draw from the here up to the top, right about there. So price could retrace to this area of support right here. You see, it wants to reverse here. The area between our three Fibonacci values from 38.2 to 61.8 is a potential support area. But as you can see now, it's trying to break that support. Another thing we can do is to have another indicator. Let's put our trend line back on, and let's put, see the bottom of this? This is a recent low. Here's another recent low. So we can draw either a line right there at this recent low. Oh, wait a second. Let me put instead something even better. Let's draw a small rectangle to show a potential area of support. Between this low and this low right here, see this low? Right there, this is a pretty strong area of potential support. So from a Fibonacci standpoint, we're trying to break the 61.8, yet from picking the two recent lows, we got support right here. So let's take a minute and see if price is going to hold here. I'm going to pause the video and then we'll get back to it in a minute. Okay, price came down to the 61.8. It did not come all the way down to the support level as we previously drew. Came back. It's trying to break out. As you see, it did go up. Price went up a couple ticks above the close of this bar here, which was at 87.25. Moved up 2 ticks now. So there was a several minute fight between buyers and sellers trying to decide if they're going to reverse price. It was coming down here, reverse price, and move to an uptrend. So buyers came in. The sellers were overtaken. The buyers are now in control, driving the price up. So if we had bought at 87.50, we would be up right now, looks like, what, $150? So the buyers are still in control. They're taking it up. Now we do have resistance way up here. Or for you Fibonacci fans, what we can do, we can draw once again another Fibonacci retracement. We could leave that for a minute because, well, let's just leave it for a minute. I'm going to draw now from this reversal point. I'm going to draw up. Well, I probably should draw it coming down again to get the other percentage value. So let's draw it from the other direction. I personally don't worry about the percentage value. I just look at the lines themselves. I'll show you that in a minute. So let's go way up here and then down to our reversal point, which is right approximately here. Now it's getting difficult to see because we have so much information on the chart. Okay, so here price came down. That's where we put the zero line. It went up to 38.2%. Remember, this is the area where price could reverse. And you see it did right here. It hit a high at the 58% retracement mark. It couldn't get through any higher, and it's coming back down. Now there can be a series of these Fibonacci retracements. Let me get rid of this previous one. Okay, so now we just have the smaller one. And one of the big things that I learned when I was a day trader, you have to have tremendous patience. And it's hard to do because we want to make money. And when we want to make money fast, then we go up here and we go to a faster time frame. For instance, what you can do, and I'm really getting off subject here, but you can get to a minute chart, a 1 minute chart, and trade off of a 1 minute chart if you want to. But you see, price was unable to get up to this recent high, this cycle high. You see, this was a cycle high, came back down, went up, and it just looks like it did touch it, but that became resistance once again, and it couldn't get through. Got up to a little above the 50% retracement, and down it went. So we're in another cycle here, and let's go back. I want to see if you can see it. Once again, see here's the big cycle that we started with about 15 minutes ago, all the way up. This is the left side of the cycle. You see this left side? That was definitely up. Now we're coming down on the right side. So what's going on? Price is tanking. Look at that come down so fast. But it's all part of this one larger cycle. And what you can do is continue to draw Fibonacci retracements all the way down. Or you can draw, in fact, let's say one big one all the way up. Yeah. So in effect, see, price could come all the way back down to between the 38.2 and the 61.8 retracement points. So you would not go long there. See, that was a fake out. You would have lost. We would have been out a fair amount of money right now if you had gone long there. And the primary reason is lack of patience. We wanted to get back in. And as you can see, price was telling us we had this trend line drawn. It's coming down. We wanted to get in and try if we could reverse, if that trend line would reverse. It's too strong. It's a very strong trend line. Now we have another trend line. What's interesting also is price charts are live, so they're always changing. So we can now draw another off of this. Yes, it is, very much so. So I think we have enough on this video. It's getting, wow, 18 minutes. I didn't mean to talk that long. But the main intent is to show that, yes, there are cycles, price cycles in your chart pattern. And no matter whether it's a 1 minute time frame, we can go to a daily time frame. You see, it's a cycle, a cycle, a cycle. Here's a cycle. These are all cycles. You see. And from a daily standpoint, you can see that here's where we're doing all this. We're trying to go up to get back to all these moving averages. And of course, it's going to have a lot of resistance once it gets there. So this is Trader Joe and Novice Trader Cindy signing off. Thanks for listening. Hopefully you learned something about cycles today. You take care. Bye now.